And there it is, the closing bell at the New York Stock Exchange, signaling the end to another trading day. And it was an up and down day for all three major indexes. The Dow Jones saw some early gains get erased over the course of the afternoon. The Dow ended the day down around 61 points. The S&P 500 and tech-heavy Nasdaq both saw losses as well. The S&P 500 closed down about 0.5%. The Nasdaq ended down nearly 1%. Joining us now for more on all of this is Jeanna Smialek. She's a Federal Reserve and economy reporter at the New York Times. Jeanna, welcome. Thanks for being with us. So what was driving all that volatility in the market today?
I think it's the same thing really driving volatility in the market over recent weeks. So obviously we've seen some big sell-offs since the start of the year and mostly in the last month or two. And we saw a big rebound last week. It seemed like today was payback from that rebound. I think investors are still trying to figure out what the chances are that we are headed for a big recession, what the chances are that we are really going to see some pain in the labor market and for corporate earnings. But at the same time, they're counterbalancing that with the reality that corporate earnings look pretty decent right now. And so I think that is why we're having some sort of price discovery, if you will, in the markets right now.
Right. It's so interesting. All these conflicting signals, right? You know, some things look strong, and then yet at the same time, we're hearing growing talks of a possible recession. Many experts seem to think it's not a matter of if, but when. But when you look at the data, do you think the Fed's recent rate hikes are working? I mean, is this what they were meant to do? Or does it seem as if the economy is stagnant?
Well, so the Fed's raising interest rates in order to slow down the economy in an effort to contain inflation. So the Fed's tools primarily work by choking off demand, and that allows supply to catch up. I think we do see some signs that the rate increases are working to help to weigh down demand. Certainly, we've seen a real pullback in the housing market. We're seeing some signs that consumers are beginning to slow down, although those aren't conclusive yet. And so I think there are early indications that the Fed's efforts are working to slow down demand. Obviously, that will come at the expense of slower economic growth. But the end goal here is really to restrain the highest inflation in 4 decades, which, as you know, I'm sure your viewers are all aware, and certainly economists are acutely aware, has become a real stubborn and thorny hurdle for economic policymakers over the last 2 years.
Yeah, right. And another stubborn and thorny hurdle right now are those oil prices. As you know, they traded higher today as the G7 leaders discussed putting a price cap on Russian crude. Oil prices were on the decline since early June. So do you expect prices to continue falling, or would G7 intervention result in rising energy costs here and overseas?
This is a really difficult question to answer because it is just incredibly difficult to predict what oil prices are going to do at any economic juncture, but particularly at an economic juncture where we have as many moving parts as we presently do. What seems pretty clear is that the Biden administration is trying to find, the G7 nations altogether, are trying to find a way to really restrict Russian profits off of oil without very significantly choking off supply here in the States and, you know, around the world. I think the question is whether they can pull it off. The indications from markets today were that they are not completely sure that they will be able to. And I think this is really something just to watch going forward. We also have other moving parts in this market. Global oil prices are very much set by sort of global supply and demand. Demand has been very strong this year. It's not clear whether that's going to persist or whether demand will fall off. And so then we've also got OPEC meeting this week and discussing supply. And so I think we do have a lot of sort of counterbalancing trends playing out right now, and it's very hard to guess where things are going to settle down.
There are so many moving parts right now. Jeanna Smialek, thanks so much. We appreciate your insight.
Thanks for having me.